You have questions, we have answers. This is Jane Miller.
And this is Ken Miller. Welcome to our show, all about real estate with Ken and Jane. Today, we are going to explore the hidden costs in a real estate transaction. Everyone knows when you buy a home, the two most expensive costs are, of course, the home purchase and the mortgage, the ongoing payments. But as part of buying the home and then maintaining the home under home ownership, there are hidden costs that not everyone realizes until you get the HUD-1 or the closing statement.
I think it's not only a closing statement, as you said earlier, Ken. After closing, that's not the end of the cost.
So,
it's the beginning of enjoying the home. Plus, there's a lot of maintenance things you should take care of. Just like us, human, right? If you why we go annual health check? Because we want to make sure everything's good. If anything wrong, at least we found early, we can fix it. So you don't want to wait till the last minute, it become a huge cost, right? So that's why it's very important. Yes.
Correct, right. And some of the things, so we're going to break this show into two segments. The first is going to be the associated costs with buying the home.
Yes.
And then after you own the home, the ongoing costs like the utility bills, the property taxes, unexpected repairs. That'll be the part two of the show. And we also have some tidbits for some homeowners that may qualify under New Jersey. There's different tax relief programs for seniors and disabled. So we're going to roughly touch upon that. But let's get back to the home buying process. When you're when you're hot and heavy into the process of buying the home, some of the things you have to prepare to spend up front as part of the investment in evaluating the home are, number one, the home inspection cost. That's going to range based on the scope of the inspection, what services you cover, but it's going to be, I don't know, what do you want to say, roughly $1,000 plus or minus. And then if you do an underground oil tank sweep, if you do a sewer scope inspection, it can be
swimming pool,
right? Different septic. Those are
all well testing.
So it could be from $1,000, and it could go upwards from there.
Yeah,
right. So that's something that you have to budget. And then if the home purchase may or may not work out, but that's a cost that you have to be prepared to absorb. And that's not something you can outlay as part of the closing. That home inspection company needs to be paid up front as part of their services. So you have to write them a check or credit card at the time of the service is rendered.
Yeah. Ken, right? As an agent, I always make sure, when I was a buyer agent, I always make sure the buyer know how much they cost, right? Just like when I visit the seller, I always lay out the closing costs for the seller, okay? So the seller knows what's not going to be in their pocket, roughly. You don't know the final price because that's just a listing price, but I always tell them, if we got this number, this is you're going to get net. If we got that number, this is how much more or less you're going to get. Normally, I go less, not more, because if you sold your house 10, 20, 30, 50,000 over, you're not going to worry about the cost because you got a majority of the money, right? Sure. But if you get less, how much less going to be? So you need to know to make informed decision. The same time with a buyer is more vital than the seller, in my opinion, okay? Why? Because as a buyer, the first time, they don't know what the cost. That's really rely on the professional. The first stop is the debatable. The first stop, either the loan officer or the buyer agent. Some buyer would go to contact the loan officer, either the bank, their banking, or friends reference, right? They want to know how much they qualified or not, right? And others may hire a real estate agent first, and then the agent will definitely refer you to a loan officer.
Right, because you don't want to take them shopping unless you know what they're pre-qualified for the loan.
Yeah, exactly. And you can't make an offer unless you have a qualified letter from the lender. But Ken, think about it. If you saw a house, right? Leave alone you waste your time with seller time, with everybody time. Just leave that alone. The time-wise is you can't quantify. Just leave that alone, right? Just emotion alone is going to be terrible for the buyer experience, because if you like the house, love it, and then you talk to the agent, to buy the house and find out you're not qualified, that would be, that's emotional disappointment will be with you for a long time, because it doesn't matter what other house you see, you may always think that house is the best, even though may not be, but that time you feel that way because you love it and you couldn't get it, right? That's amplify how much you want that house, right? So regardless, the first thing you have to make sure you get a pre-approval. Pre-approval should including the calculation of the closing cost, right? Sometimes when I was a junior agent that time, when I was newer, I was so surprised. Some lender didn't even ask the buyer question because they said they had $20,000 in the bank, right? Oh, good. And then they didn't know at least the $5,000 will go to the closing cost. They said, well, I didn't know that. I always ask them how much you want to pay the down payment, 20%, great. 20% you avoid the PMI, the insurance, which is great. And then I said, do you have another at least $5,000 or $6,000 for closing cost? Plus, you need the money in the bank account to leave after your closing, right?
Yes.
Why is that? I said, yeah, because when you buy a house, the lawyer fee is number one. Secondly, as you said, home inspection fee has to be paid upfront. The lawyer fee, sometimes
Usually
you have to pay deposit and then the closing you have to pay up in full. And also, not a big cost for the buyer is the title insurance.
Not only with the title insurance, you have the title search and then the title insurance fee. And the title insurance itself is based on the value of the home, and it's regulated by the state, but it can be thousands of dollars.
Yeah, 100%.
It's a one-time fee that's paid at the closing, but it can be quite significant.
Absolutely. So, that's why I said to them that time, I said, hey, you need at least that time, I think home is much cheaper, obviously. Yeah. I mean, 15 years ago.
The general rule of thumb used to be about you need to allocate about $10,000 for the closing
Depends
cost,
on the house.
But it depends on the house. It could be much significantly higher.
Could be more.
And usually, like you're right, Jane, usually the lenders will tell you up front now how much you need to allocate for the home, for the closing cost.
If they didn't ask you, please ask them to do a calculation for you. Roughly, because they all have the system. Very simple. They put amount there. They calculate, spudulate it itself. So you can ask how much closing cost you have to have. And as I said, right, the lawyer fee, that's definitely.
That's the lawyer.
Some have to pay the deposit and then the balance at the closing. And you have to ask the lawyer. Some lawyer, if the deal didn't work out, say, for example, you made an offer and the home inspection didn't work out, most lawyer will charge a fee for their service because they charge you per the service /hours rather than whether you, like a real estate agent, you don't get paid unless it's successfully closed. So you have to ask the lawyer, do they charge and how much they charge if the deal didn't go through. And some of them may just charge per transaction, but you have to ask that question up front. So that's a lawyer fee.
Right.
And secondly is a home inspection. So we always recommend the people to do the general home inspection and wood destroying insect. That's a part of it. Your lender want to say that. In additional to that, we always recommend you to do the redown. Sometimes even they don't have a basement, but some people still want to do it, so at least right? And that's pretty much these three is called the general inspection most people have. And the other ones, the case by case is like oil tank, right? Say if you live in a townhouse and I don't think there's worth it because the townhouse is a condominium on the land outside.
Right.
Condo townhouses, you don't have it. And a certain new community like 55 plus, right? You only own inside the house too.
Right.
You don't
It's
go
a condominium
outside.
Ownership.
Yeah. So even though you own the house, but you don't have much land, so in that case, you may not worth it to do, right? Once again, consult your attorney and your buyer agent to decide. And nowadays, I'm just going to, nowadays, right, almost the majority of the buyers will do sewer inspection. once I had a sewer inspection scheduled, the seller was so upset. The seller said they went to a party, and then they talk about the sewer inspection. Everybody laugh at them, think they are foolish allowed such inspection. I said, why? They said the older friend laughed at the party and said they never did that such a thing. How ridiculous. And I told the seller, I said, yeah, when was the last time your client buy or sell the house? Maybe 10 years ago. I mean, the camera just only invented recent years, right?
Yeah.
Without the camera and the technology, of course, there's no sewer inspection. How are you going to inspect the sewer,
Yeah, and if
right?
you bought the home 20, 30 years ago,
Of
when the
course they
home was
don't have
relatively
it.
new, they don't have it because
Even
the
this
piping.
old one, they can't do it.
But now with the trees growing and with the roots growing, and oftentimes, so it is a case by case basis, but it can be worthwhile, and it does generate
Ken,
findings.
you just said it's worth it to do it or not. I'm talking about whether physically you can do it or not. Think about 20 years ago,
Yeah.
right? If it is an old house or new house, regardless, how are you going to do it? The pipe is so small. How are you going to tell 20 to anywhere between 20 to 50 feet? How are you going to tell? There's no way. So when I started 17 years ago, nobody did a sewer inspection because we never heard of such thing.
Yeah, now with
because
now with the
they have
technology
it.
and the camera
so
can.
For the peace of mind, I would highly suggest you to do it. It's not that much expensive compared with the house price. And almost every buyer, every contract, because I mainly represent seller, almost every contract come to my desk for the last 3 to 5 years, accompanied with a sewer report. Okay,
Right.
so I think that's money worth to do for your peace of mind, right?
Yeah.
For your peace of mind.
Now, on the flip-
especially like you said, if the older homes, they could have a tree roots, they could have a blockage, the pipe could have a problem itself, decayed. I mean, there's a lot of things. So that's why it's very important.
And on the flip side, if you have a septic, it's the same thing. You must do a septic inspection to make sure the septic system is functioning properly, the leachate fields are working.
Absolutely.
That it's up to the code. I mean, that's a critical thing because a new septic system, you're talking thousands of dollars, anywhere
around about 30
to 40,000.
give and take.
It all
the
depends on the size of the
and the soil. Yeah,
soil conditions, right?
And about the 30 plus.
You just need to do that. So that's another investment, but it's mandatory. So whether you have a
Yes.
sewer, which is the conventional way, or if you have a septic system to collect the waste, that's another.
Yeah.
Then you have to budget for those inspections.
Yeah, other one maybe insurance. Other inspection maybe pool inspection. If you have a swimming pool, and I would highly recommend do pool inspection. Even though you bought house in winter, you still have your inspector have a look. So once again, for your peace of mind, right? And all
you have
your
to check the pool, the lining, the pump, the functionality.
And
overall
oil tank is a must
tank,
if you buy single family. A lot of people said, I know for sure they don't have it. For the inspection fee, it's 100% worth it.
Yeah.
It's for peace of mind. So God forbid anything happen in the future, at least as a buyer and homeowner, you did everything protect yourself.
And they do come up from time to time.
Yes,
You've had
they
them
do.
Hit them, yeah.
Yes.
All right, this is a good break point. We're going to take a quick break. We'll be right back after these messages. Okay, welcome back to our show. So let's continue talking about the expenses associated with buying the new home.
Closing
it.
We couldn't finish that break.
Right, before you move in, of course, besides all these other things we covered, the appraisal costs, we're just going to, that's part of, that's a fee.
And
that's,
insurance, homeowner insurance.
Homeowner insurance, which is if you're having a loan, you have to pay for that up front for the lender, or if you don't.
If you're cash, you should buy homeowner insurance.
You should buy it anyway, too.
Always buy homeowner insurance.
So those are expenses. Yeah. And last but not least, of course, is the moving expense. You've got to think about how to get your stuff from point A to point B, whether you hire a professional mover, even if you do it yourself, there's a cost. Yeah. So these are all things you have to factor in. It's a whole operation to get your home bought.
Once again, if you ask your friend, ask your agent to provide the referrals, because that would help you cut down the learning curve. Try and error.
Right. Yeah. So now, once you move into the house, like a car or like your body, there's ongoing maintenance and ongoing costs. Of course, there's property taxes. That's something they said in life. There's death and taxes. Those are two things that you can't avoid.
Yeah.
And the accountant I went to a seminar last night, and the accountant said, "Well, we can't help you with number one, death, but we can help you try to." There are strategies we can do to avoid or defer property taxes. So, yeah. But so we're going to get into what some programs that the state of New Jersey has for eligible seniors and people on Social Security disability benefits. We're going to cover that. But just as a recap, property taxes, homeowners insurance, you're going to have to pay on an annual basis, utility costs, maintenance of your home. You have to budget for unexpected repairs, whether it be the roof, new windows, the unexpected furnace that needs to be replaced, landscaping, and snow removal. Now, whether you do it yourself or you hire somebody, there are costs involved. If you have your own snow blower, there's a cost of the snow blower to keep that maintained, fuel it with gas and oil and regularly maintain it. Or there's, of course, if you hire somebody, then you have those ongoing costs. So these should all be factored in. When you buy the home, your upkeep costs. They said one good rule of thumb is you should budget 1% to 2% of the home's value for unexpected repairs and set aside, so that when that furnace needs to be replaced and it's a $15,000 HVAC thing, you have the money set aside. Whether that's just a good practice if you can do it.
Well, Ken, regardless you can or not, you have to do it. Otherwise, if something broke, you have to put on a credit card. The interest rate is much higher.
Right.
So,
yeah.
Yes, but
yeah.
Sometimes I think if you have money in your account, you spend it. If you put them in a separate account called the home maintenance account, so you don't see your account, you probably go less bar and last movie, so you save it up so you don't have a worry. Yeah. One more thing, Ken, is that if your house in condominium, you have HOA fee.
Sure.
I have a quick story to share, right? I had a client, they buying cash, okay? They bought a townhouse, brand new townhouse cash. Mm-hmm. So obviously they bought a cash, they paid HOA, whatever. And after that, they forgot they have to pay tax, property tax, as well as HOA. Because they just literally forgot because they've been paying, and later on somehow they dropped off. The bank automatically finished. They don't know why. Regardless whose fault.
So they assumed it was being paid through the auto pay.
They
or
forgot.
auto draft, but they
forget about. They think they've been paid or they forgot to pay. They used to be on the auto pay for the taxes and property tax and HOA. But 2 years, 1 year down the track, and they just somehow stopped by what unknown reason. So and then the people went back to China. And because they come and go, right? Yeah. They didn't know until one day I got an urgent call. They were in court because the township and the HOA sold the tax lien on that. So they at the end I have to hire the very extremely good lawyer to fight in court for both. Yeah. Pay the fine, pay the interest, pay the lien off. Yeah. That was a big deal. After that, I said to her, "You don't even live here. Why don't you sell it?" So we sold the house.
Right, that's one thing you have to be aware of if you're going to buy a property. Not only do you have these costs, but you have to have some skin in the game in managing it, or care shown to it, paying for the utility bills to keep it going, property taxes, like you said, HOA fees. These are all ongoing things. And in New Jersey, I guess you have to remind clients their taxes are billed quarterly, the middle month of each quarter. HOA fees usually, depending on the association, they're either monthly or sometimes they can be quarterly as well. But you have to know it's very, very important to know these. Homeowners insurance, you've got to keep your policy up. If you might get a mail notification if you're not set up with electronics. So you have to know to renew your policy. You have to just
you have to have a checklist put on your Google Calendar, because the thing is, the common mistake I saw, right, is like especially cash buyers or the people had a mortgage. Say the people had a 7 years or 10 years mortgage, they paid it off, right? And then they forgot, because when you have a mortgage, the mortgage company used to pay the property tax and the insurance company pay insurance. But once you finish, you have to make sure your insurance are up to date. Can you imagine if you invite a friend and they fell inside your house or your dog bite them, whatever the reason is, they're gonna sue you. You don't have a homeowner insurance.
And now talking about insurance, that leads to our topic. That's a very hot topic now. When you buy a house, a lot of times insurance companies get involved with the age of the roof. That's correct. That's their pet peeve now. If you can't prove the roof is younger than 15 years, sometimes the insurance buyers have a hard time finding insurance for that home that they're going to purchase. So that's one of the pet peeves. But also, you should review your policy annually. Make sure you know what's covered, what's excluded, what your deductible is, and you should review possible savings. Whether if you add a security system, a fire alarm system. If you bundle the policies, these are all things that you need to look at to see if they could save you money. But you have to review it annually. What is the replacement cost of the house? So God forbid there's a fire and the home burns down. What will it cost to rebuild it? That's what you should be more concerned with as opposed to the market value.
Yeah. So, a lot of homeowner common mistake is they go with whoever give them cheapest quote for the homeowner insurance. Think again. You have to ask what's included, right? Just like you go to buffet, right? Sometimes you can all you can eat. Sometimes they charge you per dish, even though it's buffet style. You have to ask exactly what your policy included. Make sure that's adequate because we buy insurance just God forbid in case we need it, right? You don't want to buy all this insurance these years, but one day you need it, you realize that insurance is not enough to cover or they don't even cover.
Right.
So you have to make sure the exceptions and whether the amount covered, like you said, right? If the house burned down, whether because inflation recent years, whether it's enough to build the same house, you have to really make sure. So have a chat with your the insurance personnel, the officer, rather than just compare simply who give you lowest monthly or the insurance quote. You have to understand what's in the quote. Just like you buy a house, right? Two identical houses on a similar location. One is significantly higher than the other. Why? Maybe the condition, maybe they have new roof, new window, new kitchen, new bathroom, new HVAC. That's what add up the cost, right? So the same with the insurance. You have to see what's included. Yes.
Now let's talk about the taxes. Obviously, taxes in New Jersey, majority of the tax money goes to the school systems, and usually the taxes increase for most homeowners every year. That's just
because costs of the township
because
go up.
Costs of the township go up, and that's you can't avoidable. But New Jersey does have some tax relief programs available for certain groups. One of them is a senior freeze. If you or your spouse or civil union partner are 65 or older, or if you're receiving Social Security disability benefits and your annual income is less than $172,475 based on 2025, you can apply for a senior freeze, meaning they would freeze your taxes at whatever the base year. Let's say you're eligible in 2025, and let's say the taxes were $8,000, and then they go up to, let's say, $9,200 the following year. If you qualify under the senior freeze program, you still have to pay the municipality the taxes, but then you can apply to the state for the refund of the excess over the $8,000, the difference. So in this example, from $8,000 to $9,200, you would be eligible for a $1,200 refund from the state.
But you still have to pay the township.
You still have to pay the township, but you get a reimbursement, right?
Yeah, by the state.
And then there's also eligibility applies, but the main thing is that you have to be your principal residence. You have to live in it.
Yes.
You have to meet the age or the disability requirements. And you have to have lived in the home at least since the end, I guess the current rules are since the end of 2022. And it can't be a vacation home, can't be a rental property, it must be a vacant home. One more thing to be said about this, you don't have to be just a husband, wife, or civil union partner. You can have a brother and sister live in the house. And let's say the brother pays all the taxes, but the sister is the only one residing in it. The brother could qualify for 50% if they own it 50-50. It doesn't matter who, he could qualify and get 50% of the reimbursement.
I mean, for this one, right, better ask a professional. This information is we learned, we gathered from seminars or online.
Yeah, it's online.
But for the accurate, please contact the right department. Yeah.
Right. And the other thing, apparently New Jersey makes it easy. There's one application on their website, the one form that you fill it out based on your information, and they determine which program or programs you qualify for. There's the other program, the Anchor Affordable New Jersey Communities for Homeowner and Renters. If you're a homeowner and you make less than $250,000 and you're it doesn't matter how your age and you have a principal residence, you can apply for some tax relief. Or if you're a renter and you're earning less than $150,000 gross income, you can qualify under that program. But again, in both those cases, the place where you reside has to be your principal home too. And again, New Jersey residents can qualify for both. There's one form, it's called the PAS-1 form, and then you can fill it out, and the state will help you determine what if anything you qualify for.
Yes.
So those are just good things to keep in mind. At least New Jersey's doing something to try to keep people, make it more manageable for those people that are affordable for those people that really need the help.
Yes.
Yeah. And you mentioned something about utilities. That goes to the question of what can you do with the utilities? That's an ongoing cost, but you mentioned a lot of things like the new roof, updating the windows, sealing,
insulating,
those are
siding.
all siding. Yeah. Those are all things that you can do to that are investments in the home that will help appreciate it, but also will help manage and reduce your utility costs.
That's right. Some people may consider solar panel as well. So, but you have to talk to individual provider to see the cost versus effectiveness. Because if you purchase the solar, there's a cost. If you lease, there's a cost. How much that's going to offset your utility bill. But I think the majority of people do it not only for the cost. They mainly want to be, environmental, purpose,
right? And
to be a good citizen,
sure,
right?
And then also get some rebates from it is always nice on top of it too.
But you have to talk to individual company because to see which program, which company more suitable for you. When you have a solar, you have to make sure to read the contract thoroughly for the fine print about how they service it, if anything break, how much it's going to charge you to do that. And
it's always best if you can purchase it rather than lease it, because if you lease it and then you want to sell your home in a few years, it could add complications to the sale process, right?
Yeah.
So the last thing I want to cover in our remaining minute and a half time or so is the home warranty program. Yeah. Just comment on whether that can be a good idea for certain homeowners to have peace of mind, and what situation would it be applicable and best used?
Yes, I think the PSE&G offer worry-free, and there's a lot other companies online to have that program too. Once again, you have to read it and read the fine print
and know
see.
Exactly, and know what's covered, what the deduction is, and whether they cover replacement. Because not all the home warranty programs cover.
I believe doesn't cover
replacement. So you have.
But I could be wrong. But I think it doesn't. But read the fine print. A lot of time you have to read the fine print and to make sure. Yeah.
Yep. Okay. All right. We are just about out of time, Jane. I guess the final piece of advice is don't wait until something breaks. Make sure you have a little emergency fund set aside. Consider, a home warranty program if you have older appliances. And just plan accordingly.
Yes, absolutely. You always have the access fund. And then if anything going to break, maybe just fix it or repair. Prevention is the key.
That's well said. All right. We hope you enjoyed the show. We'll see you next week. Have a great weekend.
Thank you.